Hello, everyone. Hello again. Today, we'll be going through the budget speech 23-24. So for those who don't know me, I am Jayesh Ramloll from the Regan van Rooy International Tax Team, tax manager at Regan van Rooy since February this year. And for those who don't know us, we are a tax boutique, tax advisory firm focused in Africa, both inbound, that is non-African businesses wanting to come into Africa, and outbound, that is African businesses wanting to expand across Africa and to expand globally. So our flagship offices are in South Africa and Mauritius mainly, and our African tax offering is built upon two pillars. Our South African office and Mauritian office, we provide a full service tax offering. That is everything the Big Four offers, from tax compliance, corporate tax, PAYE, VAT, withholding tax, customs, to mergers and acquisitions advice, complex multi-jurisdictional reorganizations, and refinancings. So, which brings us to today, the budget speech, the Mauritius Budget Speech, which has been delivered by the Minister of Finance this Friday last week. There was some significant changes, especially to the personal taxation, and we're going to go through most of the changes, the key changes, and you'll see it's divided into personal tax, corporate tax, value-added tax, tax administration, and immigration. So a budget overview. So we start with an overview of what the budget speech was all about. So a budget to make Mauritius more and more competitive, and make Mauritius attractive destination to work, and with drastic changes to the personal taxation system in an attempt to restore Mauritius. The reputation of Mauritius was lost for quite a few years as a low tax jurisdiction, and hopefully these measures will restore Mauritius' reputation back. So we also have incentives for non-citizens, the streamlining of the process, the immigration rules in respect of work permits and occupation permits. Other sectors, particularly the banking sector, the telephony service providers, are taking the hit. Unfortunately for them, they are taking the hit for the tax reforms under the personal tax systems, especially. And the TDS scope, as we have seen last year, this year as well, the government are extending to other service providers. And we also see the renewal of the much anticipated and much loved tax array settlement scheme, amongst other measures as well. So we're going to go through all of this, and we start with the personal tax, and just a brief overview of what it was. So previously, as you can see in the table, individuals were having annual net income not exceeding 700,000, they were taxed at 10%. Between 700,000 to 975,000, 12.5, and exceeding 195,000, it's 15%. Now, as announced in the budget, as from the 1st of July 2023, the tax system will be completely progressive and the solidarity levy will be removed, which is the biggest announcement that they have made in terms of personal taxation. And all income taxed incrementally, and chargeable income is divided into different revenue brackets, with each bracket having a specific tax rate, and this can be summarized in the table. So as you can see, the annual chargeable income range from 0 to 390,000. The first 390,000 won't be taxed, and the surplus, that is 390 between 390 and 430,000, will be taxed at 2%. Again, the next 40,000 again and again until it reaches 20%. And the remainder over 2.3 million will be taxed at 20%. And individuals with dependents and a chargeable income up to 30,000 per month, and that is 390,000 annually, will be exempt from income tax. An individual with two dependents having a chargeable income of 50,000 monthly will also be exempt from income tax. So here is a computation of how the new tax regime will be impacted, and this is compared with the old tax regime, as you can see. As you can see here, we have the old regime. So we start with 700,000. That's annually. We move up to, we add another 500 to 1.7, 2.2, 2.7, and 3.2. So, and as you can see, under the old regime, for the 700,000, tax payable was 32,500. Of course, that's with an exempt income of 50,000 and income exemption threshold of 325. For just for the sake of this example, I kept the figures same for all the income brackets so that we don't, so we have a clear idea of the maximum amount of tax that can be saved. So 32,000 in the first year for the first 700,000, and compare that to the new tax system, which will be 16,800. And you can see the revenue brackets. The first bracket, of course, is exempt. Second bracket is 800, all the way up to 6,000. And you can see for 1.2, we did the same for 1.7. And you can see the tax savings are increasing up until a certain point. So over 2 million, you can see that the tax savings start decreasing, which means that as you earn more income, your tax, of course, will increase. But compare that to the old system, it's getting to the same amount, up to 3 million. As you can see, you're actually paying more tax under the new system if you go above 3 million. But we have to see that as well with the solidarity levy, which has been removed. But over and above the 2.3 million, you'll be taxed at 20%. So just to give you an idea of how much tax savings and how long can you make the tax saving for, how much income you're earning and your tax savings depending on that. And you can see as they start with the first 700,000 to 1.2 million, you can see the tax savings start to increase, but at a certain point, they decrease to below, effectively no tax savings after 3 million. So the more an individual earns, the less tax savings. That's obvious compared to the old regime. The progressive tax regime brings more equity and fairness to the tax system. So it's more applicable for individuals earning in between 700,000 to probably 1.5 million annually. So they'll be seeing the real savings that they can make. And the abolition of the solidarity levy is a step towards restoring the competitiveness of Mauritius as a low tax jurisdiction, as I mentioned at the start. So next, the solidarity levy. So just a brief background on the solidarity levy. So a tax resident individual was required to pay a solidarity levy of 25% on its leviable income, chargeable income, plus the dividend received exceeding 3 million, which is capped at 10% of net income, including local dividend. Here again, we have an example of how tax savings can be made with a new regime, with the abolition of the solidarity levy. And the old regime, we start with a 3.7 million revenue annually. And of course, we apply that to the old regime, and you ended up with a tax of 560,000. Compare that with a new regime, you only have, of course, we have abolition of the solidarity levy, you only have 514,800 to pay. So the tax saving of 45,200. You can see, as you earn more, of course, you'll be paying more taxes, but compare that to the old regime with the solidarity levy, you'll see that your savings will increase as well. And your effective tax rate, of course, is lower than before, with 21% under the old regime, 24% as your income increase. And this will level off to 25% under the old regime. But of course, the more you earn, but the increase has to be significant for the effective tax rate to reach the 25% under the new regime. So what are the observations that what are the conclusions and observations that we can make from that? Is for now, we know that 30,000 monthly, that is 390,000 rupees annually, is not subject to tax. That's the first income bracket or the first income exemption threshold. We also know that an individual with 2 dependents earning up to 50,000 rupees, 650,000 annually, is also not subject to tax, of course. That's, if you look at the old regime, that was the category B or C, where an individual had 2 dependents and could claim an exemption up to 650,000. So this year it would be 650,000. And what about individuals with more than 2 dependents? Of course, it has not been mentioned in the budget speech and in the annex as well, but we believe that there has to be something along the lines of what it was last year, where the progressive increase of the income exemption threshold, you could benefit from that if you have more than 2 dependents, 3 or 4 dependents. So we have to wait and see what the government will publish in the Finance Bill and subsequently through the Finance Act. This is where we'll have confirmation of all these measures that have been announced in the budget speech. Of course, the solidarity levy. Big question is, well, currently local dividend is being captured under the solidarity levy. Now that it is abolished, will local dividend paid to an individual still be taxed? According to the budget speech, we don't have indication that will be the case, which give rise to potential loophole. But of course, we foresee some measures to be implemented along these lines, because you could see lots of individuals with lots of investors with lots of shareholders with huge amount of dividends being paid by a local company, by a domestic company, take advantage of that. So we'll see what the government says on that. Also, we have seen the increase in the minimum wage for individuals. So 85,000 individuals will now have the assurance of a minimum monthly income of 15,000. So the minimum wage is now increased to 15,000. And if that 15,000 has not been reached, including the CSG income allowance, which is already being given by the government or by the MRA, the government will step in and add the difference up to a maximum of 1,425 every month. So that's a relief for those really down the income earning ladder, and they can have the assurance that their income would reach the 15,000 threshold. So moving on to corporate tax, we have seen the partial exemption being reviewed. So 95% now is applicable to interest earned by a collective investment scheme or a closed-end fund established in Mauritius. And it remains to see the conditions that will be applicable to these companies. As we know, there are conditions that need to be met in respect of interest, and it will be interesting to see if the MRA will be reviewing these changes with these conditions, and in order to benefit from this 95%. And then the 3% reduced rate of corporate tax, the existing one, which is on export of goods, and now it's been clarified or added or extended that profits derived from the sale of aviation fuel to an airline, that also will be considered as an export of goods and will be subject at a reduced rate of 3%. And taxation of banks, as I mentioned earlier, banks are seemingly taking the hit for these reforms, especially with the personal tax, and the revenue foregone by the government in the personal tax. I think they will now offset it against the new measures for taxation of the banks. Now they will have to compensate for the loss of revenue somewhere, and unfortunately, banks will be the one suffering that. And the incentive for banks, which is available for the years of assessment 2021 and 21-22 to banks for having chargeable incomes exceeding 1.5 billion. So there was a 5% reduced tax rate, but now this 5% is no longer available, and they will be taxed at 15% as from the year assessment 22-23 itself, if the chargeable income is above 1.5 billion. So for the large banks in Mauritius, like the MCBs, SBM, APSA, they will take the hit on that. So we also have solidarity levy on telephony service providers. So bad news for them as well. So not only banks. The profitable company currently, which pays 5% of its accounting profits and 1.5% of its turnover as solidarity levy, the rate on the turnover will be reduced from 1.5 to 1%. And this 1% will now apply to the company even if they have made a loss. So this 1% is applicable on the revenue, irrespective of whether the operator is profitable or not. Before, if it had made a loss, it didn't have to pay this 1.5%. Now that it's reduced to 1%, they have to pay it on the turnover. Next up is the investment tax credit for manufacturing companies. So a yearly investment tax credit of 15% over 3 years, that is 45 in total over the 3 years, is granted to manufacturing companies in respect of any expenses they have incurred on new plant and machinery, and that excludes motor cars. Now this investment window will be extended up to 2025, 2026. Any unrelieved investment tax credit may be carried forward for over 10 years. And companies engaged in manufacture of both alcoholic and non-alcoholic beverages will be allowed to claim the investment tax credit on expenditure incurred on new plant and machinery used exclusively for the production of non-alcoholic drinks. So this exclusively has to be incurred on plant and machinery for the production of non-alcoholic drinks. And continue with tax deductions have been announced, a few of them. So double tax deduction granted to manufacturing company, again, on research, market research and development and product development will no longer be, of course, that will no longer be restricted to African market. Before it was only in the African market, and now this facility is restricted to company having annual turnover exceeding 500 million. So what I mean to say is it's not only restricted to companies to investment in the African market, but now if you want to make an investment in the market research and product development, you can make it. But the restriction will be applicable for companies having an annual turnover not exceeding 500 million. And it's actually for 200% spent by local companies participating in the financing, sponsorship, or marketing and/or distribution of an approved film project under the film rebate scheme, which is an existing scheme that is in place in Mauritius and intended for a theatrical or media streaming release. So the approved film should be produced at least 90% in Mauritius. And a double deduction will also be granted for employing newly recruited women and unemployed women for at least a year under the Prime à l'Emploi scheme. And an increased tax deduction of 300% will be available for companies for employment of disabled individuals. It will also be compulsory for companies having more than 250 employees to provide facilities in the workplace based around childcare. So a double deduction will be available for them. Of course, it's compulsory if you have more than 250, but along with that, the government is giving you a double deduction on the cost of setting up the childcare center. So all these measures, of course, will have conditions attached to them, and these conditions will have to wait and see through the Finance Bill, as I mentioned, and the Finance Act. Usually that comes out in mid-August, where we'll see all the changes being voted on and enacted. And this is where we'll see the real conditions and whether these measures have been implemented, the proposed measures have been actually taken into consideration, or we'll see a change in the figures, maybe not 300%, it can be reduced, but highly unlikely, but it can happen. We've seen it in the past. So we'll need to wait and see we'll need to wait for the Finance Act to be sure. And further down the line, we also have the tax deduction at source, the TDS, which has been expanded to payment for fees made by insurance companies to panel beaters and spray painters for repairs of motor vehicles of policyholders. That's 3%. And we have interior decorators and designers, that is 5%. So here again, the TDS retained on fees paid to a management company and an investment advisor licensed by the FSC will no longer be applicable. So no TDS will apply for them when making a payment to these companies. We should bear in mind last year's budget, what was announced was the consultancy and the free, as you can see on the table there, which was at 3%. And these were applicable as from the 3rd October 2022. So we are expecting the same to happen this year. It won't happen as from the 1st July, but because we need to wait for the Finance Act. So once the Finance Act has been finalized, has been voted on, then we'll know. So it's highly likely that these changes to TDS will be applicable as from the 3rd October, probably, but we need to wait and see. But we've seen companies, last year's budget, they announced the consultants, they have to retain 3%. And also we noted that the increased rate on rental as well, companies were already applying that as from July, but they should have waited for the 3rd of October, which when it came into effect. But yes, it's worth mentioning that so that you don't start applying your TDS as from July itself. And we've seen now, of course, the COVID-19 is hopefully well behind us now. And in terms of government assistance, yes, we've seen the government wage assistance scheme being deployed over the years. And of course, you had to pay back through the COVID-19 levy. And at long last, all the outstanding debts of the COVID-19 levy have now been, as of 20th of January 2023, all have been waived, all inclusive of penalties and interest as well. So no longer have to pay the COVID-19 levy. I know it's a bit of an administrative burden to know exactly how much you need to pay, how much it remains, because it was applicable for 2 years. You had to pay the amount for 2 years. Sorry, just admitting somebody else. Yes. We had to pay these amounts for 2 years. If you received it, for example, in 2020, you had to pay it for 2020 and 2021. And of course, you had to apply the formula, but now it's been revoked, so no need to worry about it. We can move on. Corporate social responsibility. Now we know the CSR amount of 200 million that was collected by the MRA will be transferred in the Solidarity Fund annually as from the financial year 2023-24. Well, we now have a bit more clarity of how the MRA will use these funds and where they are depositing these funds. Before, it was a bit of a blur. We didn't know exactly where the funds were going, but now, well, they've given us a bit of clarity, a bit of transparency, but we hope that they do more of same with other measures and bring more clarity to what they're doing with the funds as well. We have seen also the protected cell company and the variable capital companies, the PCC and the VCC. So big changes. The MRA will not have recourse when it comes to a PCC to other cells or non-cellular assets of a PCC to recover tax owed by the cell. So all the tax owed by the cell will be limited to the cell in terms of the asset. If the cell cannot pay back the income tax, the MRA can only have the recourse to the assets of the cell. And likewise for the sub-funds and all special purpose vehicle of a VCC. And they will be treated as a separate entity from the actual vehicle, from the actual variable company itself, variable capital company itself, and each fund will be treated as a separate legal entity for the purpose of recovering the income taxes. Next up, we have the financial assistance to specified enterprises, so the salary compensation 2023. Following decision of the government, it is being proposed that the monthly financial assistance will be provided for payment of salary compensation 2023 of 250 rupees, or 500 rupees per eligible employee of a SME, including any expatriate employee, depending on the profitability of the company. You'll have also 300 rupees per eligible employee of an export-oriented enterprise, including an expatriate employee, and 500 rupees per eligible employee of a large public bus operator, including an expatriate employee. The assistance will be payable to an SME or export-oriented enterprise during the period from January 2023 to 24, including a double payment in December 2023. And for large public bus operator, financial assistance will be provided during the period from January 2023 to December 2023 for 1 year, including the double payment in December 2023. And we've also seen the extension of the tax area settlement scheme. So this has been reintroduced, extended. They have extended the TAS under the Income Tax Act, the VAT, the Gambling Regulatory Act, whereby penalties and interest for taxes due are fully waived, provided they are paid by 31st March 2024. So taxpayers wishing to avail from this, they should register by 31st December 2023. And very important as well, if there are any assessments pending at the ARC, Supreme Court, or Privy Council, they should be withdrawn in order to avail of the scheme. Now we move on to value-added tax. We've seen a few measures, a few amendments and exemptions that been announced in the Value-Added Tax Act. So the VAT exemption granted on construction of a purpose-built building for the provision of tertiary education has been extended to the construction for primary and secondary education, and instruments appliances used in medical, surgical, dental, and veterinary sciences will be made zero-rated for VAT purposes instead of being VAT exempt. And we have seen the special levy. Again, banks are taking the hit again through the special levy in the VAT Act. Now the special levy on banks will be aligned to 5.5%. So this will be applicable to all banks, irrespective of size. Currently, 5.5% is applied to banks operating income of not more than 1.2 billion, and 4.5% is applied to banks having operating income in excess of 1.2. So 5.5% is being aligned for all the banks. Next, we have tax administration, a few measures being announced, a statement of financial position, a virtual asset service provider, and an issue of initial token offerings will have to report annually to the MRA. A transaction made by either an individual or corporate. So for an individual exceeding 250,000 or transactions exceeding in aggregate 2 million rupees in a year. And for a corporate, 500,000 or transaction exceeding in aggregate 4 million rupees in a year. So request for additional information from banks. So the MRA they have the power to make additional requests for information from the bank if a benefit by the MRA has been credited in a wrong bank account. So that would be helpful for taxpayers having been paid by the MRA in the wrong bank account. So they will have the power to rectify that. So I think we move on to the last slide, which is the immigrations. That's most appropriate for the non-citizens, and there are quite a few incentives for non-citizens as well, in an attempt to make, again, along the lines of making Mauritius more competitive compared to other countries. A resident non-citizen is allowed upon application to acquire residential property of a minimum of 500,000 USD. Previously, that was 350,000 USD. Outside of existing schemes, subject to payment of additional registration duty of 10%. But only one property may be acquired by the main holder of a resident permit, and not his or her spouse or children. So the acquisition of property in a property development scheme project relating to senior living. So the Immigration Act will be amended in this case to grant a residence permit to a retired non-citizen for acquisition of property under the PDS project relating to senior living. So of course there are conditions there, provided that the acquisition price exceeds 200,000 USD and the non-citizen is aged above 50 years old. The status of resident shall remain valid as long as the buyer holds the property. And this amendment will be backdated to 27th of April 2019, and the scheme was amended to include construction for purpose-built building and bringing an existing building under the scheme targeting senior citizens. And we have also Sustainable City Scheme. The Non-Citizens Property Restriction Act will be amended to allow non-citizens to acquire residential property in a sustainable city in the same manner as for an acquisition under the Smart City Scheme. Then you see again, the Immigration Act will be amended to allow the citizen and his family to be granted the residence permit on the acquisition of the property, and a minimum price of 175,000 under the scheme, under the Sustainable City Scheme. Of course, you still need to hold the property to benefit from that scheme. And we have the occupation, work permit, and visa, and these have been streamlined, and the process of obtaining them have been streamlined. So no need to wait for a long time to get the work permits and the occupation permits. And the threshold for occupational permits and for professionals will be reduced to 30,000 rupees. An applicant for an occupation permit will be allowed a business visa of 120 days without having to leave Mauritius. So that's really helpful. And obtaining an occupation permit will no longer be conditional on having the local bank account. A young professional occupation permit will be open to all fields of study. A silent of consent provision of 4 weeks will be introduced for registration of foreign professionals with professional bodies, including the medical, dental, and veterinary councils. Non-citizens on tourist or business visa will be allowed to apply for a work permit. An approval of the work permit will be deemed to have been granted upon the issuance of an electronic work permit certificate if no response has been received from the relevant ministries within 4 weeks of the date of application. And to support the establishment of high-end research and development centers, an 18-month international expert training visa will be introduced. So these were a bit of the measures for non-citizens, and which brings us to the end of the presentation. We can take now, if you have any questions, you can insert them in the chat box and we can go through one by one. So if you have any questions, please do not hesitate to insert them in the chat box. That's a very good question. So Zainab is asking if we have any new changes in regards to taxation of trust. Well, we expect something to, well, it hasn't been announced, but we expect something probably in the Finance Bill or Finance Act. So we have to wait and see. Nothing official yet, and nothing being announced on that front. But we expect something to happen. Do you have any questions relating to personal taxation, the new changes brought about in personal tax? Another very good question. Well, there's nothing being announced on that. Then the details, well, as per the annex of the budget. So for those who are not seeing the question, so Ben is asking, do you think a tax on local dividend received by an individual is coming? Well, before, under the solidarity levy, this was it was captured, so the dividend from a resident company. But now, since the solidarity levy has been removed, well, at the moment there's no taxes on the local dividend, irrespective of the amount. So, but I think we will need to wait and see. For now, it's difficult to say, but it gives rise to potential loopholes and tax advantages. I don't think the MRA's intent was this, the government intent was this, but we need to see. I'm definitely sure the Finance Bill and the Finance Act will bring further clarity on this. Hope this answers your question, Ben. Do you have any more questions? Maybe if we have time, one more question before we wrap up. So if there are no further questions, as you can see my contact details on the screen, you can always send me an email or call me if you have any questions that maybe you don't want to ask in the chat box. Maybe ask me personally, definitely go for it. And I want to stress again that these measures announced, as every year we need to mention that they are proposed measures, doesn't mean they are final. Even the personal tax, we know it's going to be progressive, that's certainty, and the rates are almost a certainty, but we don't know how it's going to be implemented yet. So we have to wait for the Finance Act to come out to have certainty, and that will come out, as I mentioned, in mid-August. So by then we'll have another, we can have another session, or we'll release another newsletter along these lines, just to bring what has been announced and to confirm whether they have been put through the Finance Act, and we shall release another one by the end of August, definitely, as soon as the Finance Act is released. So again, if you have any questions, you can email me. So thank you again for your time and attending this webinar. Hopefully this has been helpful to you guys to understand what are the changes that have been brought about and how Mauritius is being impacted, and businesses are being impacted by these changes, especially the tax, the banks, and the telephony service providers. And yeah, so thank you again for your time. Thanks Ratna, thanks Olem.